First thing I'd like you to do is download and maybe even print out the Ratios Retail Management file that was provided to you. And it looks like this. Before we get into the ratios that are commonly used in retail management, let's take a look at the business documents overall. First one we're going to look at is the balance sheet. And that is the snapshot of the business overall, or in this case, an annual report, so for the entire year. And as an FYI, a lot of companies that are in retail don't use a January to December model for their annual reporting because they want to be able to include Christmas returns and any adjustments that need to be made so that they can count all of Christmas as one part of their annual sales. So our first thing is assets. Assets are what companies own. Current assets are assets that can be liquidated quickly, usually under a year. Liabilities are what a company owes. The current liabilities are those that are owed within the next year. Then you have stockholder equity, and that's what the owner or owners of the company have retained over time. And if you add liabilities and stockholder equity together, that totals assets. Our next item is the income statement, and that tells us how much money has come in. So how much is the income for the year? So we start off at the top with our total revenue, so a little over $19,000. Total revenue is also known as total sales. Then we have cost of revenue, which is also known as cost of goods sold. And we're already down to $6,900, so the cost of revenue is fairly high. You have additional expenses as you move down until the net income, which is your bottom line, is $986. Our final item, cash flow, demonstrates how cash moves through a business for any given period, whether weekly, monthly, quarterly, annually. This specific report is an annual report, and the net income of $986 through the various details affecting it shows the change in cash of $355. So there aren't a whole lot of reserves for this business should there be any financial difficulties. Now let's take a look at ratios. The first ratio we're going to look at is called common size ratios. And that by itself, or those numbers by themselves, are useless. But what you do is you look at them over time, or you compare them with peers, and you're able to determine any trends that are going on. You're able to determine, is the business improving? Is there a sudden increase in cost of goods sold, which could indicate possible theft? Is there, or maybe you need to change suppliers. There's a lot of things that you can look at closer as a result of common size ratios. To figure common size ratios, you take your data points and you divide them by total sales. So the example that I provide is cost of revenue divided by total revenue. So you scroll back down, and in this case we're doing the common size ratios for Sally's Pet Store. And if you take cost of revenue and divide it by total revenue, you get 64%. So that means 64% of the total sales goes to cost of goods sold. 36% is your gross profit. 22% is used in general and administrative selling. Earnings before interest and taxes is 10%. So the final net income number is 5%. And you do the CSRs for each of the numbers for each of the years that you are examining. This is just one example. You do it for each area. The net profit margin is one of the common size ratios. So it is used to detect small differences in profit margin changes. And it allows you to start asking questions. If you don't see it, you can't ask questions. In this case, profit margin, it's 986 divided by 19,279. So this is one of your CSRs. You've already got it figured when you did this. But because it is such a critical number in retail, I list it separately. Our next area of focus is inventory turnover ratio. You need to know how many times inventory turned over or was converted to sales during a time period. This doesn't mean that every dog collar in Sally's inventory sold within that time. It means that the value of that inventory turned over time. To figure it, you take cost of goods sold and you divide it by total inventory. 12,289 divided by 13,748. And you get 3.28. So in this case, according to retailowner.com, the retail ratio should be about 6. So she's not moving as quickly as she could. But we're looking at her business as being new. That's why she only has 1 year of information, and the fact that she even finishes in the black is a good sign. As an FYI, standard for retail is usually about 4 to 5, but 4 once per season. And that's why stores generally make major orders 4 times a year. Once you've determined your inventory turnover ratio, you can determine your inventory days on hand. So the average number of days your inventory lasts on the sales floor. To do this, you calculate 365 days, the number of days in a year, divided by your inventory turnover ratio, which you figured up here. In this case, 365 divided by 3.28 is 111.32 days. So Sally's inventory is on hand for almost 4 months before selling. That's expensive. The less time that inventory spends with you, the better your profit. Do keep in mind that there are seasonal fluctuations often in retail, and that could affect your overall numbers. So you may want to separate out that segment and treat that as a separate entity. Our final area of focus is GMROI, and that's gross margin return on investment. You want to know how much money you're making or how well your inventory is making money for you. So in this case, you are going to add the beginning inventory balance for the current year to the ending inventory balance from the previous year, and then divide by 2 to find the average inventory. Then you're going to take that figure and divide by gross profit. So gross profit, average inventory. Because this is the first year for Sally, you can't actually figure it here, but we will use this in our next portion of this tutorial so that you can see how this works. The next item that I want you to print out or download and review is Costco Financials Worksheet. And for this, you're going to take each one of the items in the worksheet and you are going to determine the numbers that go in. And I've given you a printout for Costco Financials so that you have these numbers to work with as you determine the information that fits into the spaces. So as an example, The first thing you're going to do is you're going to complete common size ratios. Now we're just going to do them for the income statement for our purposes here. So we come to the last page, and you would divide each of the different items by total revenue for all 3 years, with the goal being, are the numbers staying even? Are we seeing increases, decreases? And you take them all the way down for each year. And you can just jot it down next to it. Then the next thing you're going to do is you're going to determine net profit margin. And remember that that is one of your common size ratios. So I want you to take those numbers and put them in here. So for 2015, you would look at total revenue, also known as total sales, and you would find that here, 116,199,000 divided by net income. And if you're not sure where to find something, refer back to this page, the retail management, ratios retail management document, so that you can see where to find it on Sally's document. And it's the same in pretty much every financial report, so you can remember where to get the information you need. So you have total revenue of 116,199,000,000. Net income of 2,377,000,000. And if we divide net income, and let's look at our formula, net income by total revenue, or total sales, same thing, we get 2%. So what you're going to do is you're just going to go through each one of the items, and you're going to determine the information that goes in each space. You can't determine GMROI for 2013 because you don't have an ending inventory number for 2012. What I want you to submit is the financial ratios worksheet. And next week I'll have another worksheet just like this for a different company, and I want you to submit that one as well. You'll have your notes for next week to be able to use as review, and hopefully by doing it twice, you'll build comfort with the information.